And I will turn it over to our amazing panelists that are joining us, Jason and Lolita. If you guys can now come in and turn on your mics and turn on your video. Hey.
Hi, everyone.
We have some fans for you guys, by the way. Show some love, guys, in the chat. Make sure to put in your
Hey, everyone.
Make sure that Sundeep will take care of you now with the Q&A. Thanks, guys.
Thank you both. Let's actually just quickly start with a brief introduction. Lolita, do you want to go first?
Sure. Yeah. Thank you, Sundeep. And Cheryl, thank you so much for hosting this. This has been so awesome to just sit back, relax, have everyone else teach the tough stuff so I can just say some interesting bits here and there. My name's Lolita Taub. Really excited to be here. Thank you for all of those who have joined. I mean, we're nearly 420. That's amazing. My background is 14 plus years in enterprise tech, and that's been segmented into corporate, startup, venture capital experience. And currently I wear both an operator hat, so it means I have a day job at a company. It's a Series A startup and they're wonderful. Their name is Catalyte. And I'm an investor evenings and weekends. So that's where I played the angel role that we'll talk about and focus on today. I've done 37 investments, if you count both my VC and angel investments, and 11 in particular in angel. So I'm very much at the beginning of my career, but super proud to be here representing the underestimated community, because for me, just pushing us forward, creating a world where diversity is creating and leading tech is something that's part of my entire ethos and everything I do. So thank you so much for joining.
Awesome. Thank you for that introduction, Lolita. Jason, how about a quick introduction?
Yes, thank you guys for having me. It's a pleasure to be here. Had a little technical difficulties there. If you saw my mic drop a few times, that was fun. That being said, I'm born and raised in Buffalo, New York. And, I was in corporate banking for about 10 years, relocated all over the country. I was really focused on middle market lending. So I've lent over $100 million in capital to middle market sized companies from New York to Seattle, and took a wild life detour into reality TV. So I was on season, I believe it was 14 of The Bachelorette, and that completely took me out of corporate America. And then after the show, went back into corporate America. And from that time, I now am self-employed, have a few angel investments, but also have a few companies that I run. And one of the most recent companies that I founded is called Restart. The idea of Restart is to teach lessons that aren't taught in school, that you can't find in a textbook. It's to simplify financial literacy and really focus on individuals' financial, professional, and personal wellness. And we have real talks where we have very prominent individuals that have found success within their paths, and we focus less on where they are today and really how they got there. So we've had some notable figures like Damon John and Erica Nardini, CEO of Barstool Sports. We have Reggie Bush coming on, Barbara Corcoran, the list goes on. So it's been a very fun venture, and it's been a very interesting path for myself, unconventional, but I'm very excited to be here.
Awesome. We're excited for both of you being here. What we'll do is I'll have some questions for both of you, and then some questions that I'll kind of throw out and let whoever answer. But let's start with one for both of you, which is just simply, how did you get started in your angel investing journey? Lolita, you want to start first?
Yeah, thank you, Sundeep. And I agree with people who are saying you look like a Bollywood superstar. You have that look about you. So how did I get started? I'm first generation Mexican American. My parents had less than an elementary school education, so there was no way I knew anything about investing, angel investing, venture capital, nothing. But as is life, along the path, I ended up with this startup in Silicon Valley, and the founder was a woman. And it didn't make, I had grown up at IBM and Cisco, and so my community was middle-aged white guys. And so it was a little bit weird to work with a woman leader, but at the same time, I was so intrigued. What happened, though, it was really sad, is that when we started going out to meet investors and VCs, I realized that we were the only women and that there were a lot of challenges in raising capital. And then I also started to see the disparities in the number of startups that were founded, led, and were raising capital in general, so money for their companies. And this really hit home because I thought, well, why is this a thing? Because first of all, It's not just white guys who can make lots of money and make big companies. Everyone can. And then secondly, like, I'd like to see more faces that look like me and like everybody else, writing checks and building the companies, the products and the services that we actually need, as like in terms of the many instead of just the few. And that thread of thought got me thinking, like, I want to do something about it. And since then, in one way or another, I've always been working on how do I increase the number of check writers of diverse backgrounds, as well as the dollars going into founders of underestimated backgrounds as well. And so it was really understanding that there was a gap and having passion, but also believing that this is not charity. It is not charity to invest in people that are not white cisgendered males. It is good business. And we are moving towards a minority majority world. So listen up. This is the future. We are the future. So that's my story.
Appreciate it. I appreciate your use of the term underestimated. It's not something I've heard often, but it totally resonates. Jason, tell us a little bit about your angel investing journey.
Yeah, so I think, what's interesting is that everyone has their own journey, but I think if you look back to the root of everyone's journey is there's a strong foundation, whatever it is. Maybe it's a skill set you have, maybe it's education you've acquired, maybe it's just experience in a certain field. And I think everyone's journey is different. But for me, it was really, I wanted to just build a really solid business acumen. So I got my MBA in accounting and finance, and then I did underwriting a while for a bank. And so in underwriting, you obviously learn all the basics of a business, right? Understanding the financial statements, understanding cash flows, and just looking at companies and pretty much like almost like a Shark Tank saying, yes or no, do we want to lend the bank's capital to these businesses to support their growth or whatever they're doing? And what I found in that time, as I was getting really sharper with things, was how conservative banks can be with their lending, which obviously makes sense to their model and how they make money. But there are so many companies out there that I said, wow, I wish I had an opportunity to meet this guy, or I wish I could have met this woman who started this business. I want to be more involved. How can I be more involved? So it first stemmed from really having a strong foundation and understanding the inner workings of businesses. And from there saying, I'm not as risk averse as most people. I want more action. How do I get involved? And so from that, it then translated to finding opportunity of my own, reaching out to business owners. And my first investment actually came from a colleague of mine who graduated from the same college that I graduated from. And right out of school, he started a muesli business. So they do muesli, consumer products, consumer goods. And right from the get-go, I asked him, how do I get involved? How do I make an investment in your company? And when he opened up fundraising, I was one of the first ones that he came to. So I think there's a lot of lessons to be learned there. I think for me, it's just build a foundation. If you have an interest in a business, connect with that business owner. You never know when the next opportunity will be.
Awesome. You spoke about lessons. Maybe let's have a question on that. Lolita, what's maybe one lesson you learned, perhaps painful, perhaps not, that you'd sort of impart to folks who are earlier in their journey than you?
I would say that I was really scared at the beginning, and because I thought, who am I to invest? No one I know invests. Am I going to waste my money? Like, is this the right thing? I was very concerned about a lot of things because I have always had to take care of my family, especially after my father died. And so even financially thinking about how do I allocate money? Am I the right fit? Like, is this the right thing for me? Although I was really passionate about my vision and how I do see business, it's also very risky, right? Like 90% of companies die. So like you can lose your money it's like very likely you're going to lose your money. And I was really scared. And so I think that if I were to impart some thoughts on those who have not yet invested, so I think it's 40% of you guys, because everyone else has been super brave and just like written checks. But I would say it's always uncomfortable, but part of the whole investing thing is just to, if this is something that's interesting and you do have the disposable capital that you can just lose and be okay with, and it's something that's super interesting, I'd say just try it out. You can start small. I do appreciate that Republic allows you to give $10, for example, just to get your feet wet, and start to understand, like, is this something that's really interesting? Because angel investing and any kind of investing is really all about continuous learning and continuous leaning in, helping people succeed. And not everyone has all the answers all the time. I know there are a lot of people who say they do, but no one does. And it's just continuous learning. So again, recap, if you are feeling uncomfortable, it's totally normal. It's what happens when you start something new. 2, if you just want to even if you do have a lot of money, but you're like, this is my first time, start small, just to experiment. Maybe it's your thing, maybe it's not. If it is, you can start leaning into it. And that's exactly what I've done. And I don't think I'll ever stop. So for good or for worse.
That's awesome. And I appreciate the recap as well. Jason, how about yourself?
Yeah, I love that Kevin already dropped the Wayne Gretzky line that you miss 100% of the shots you don't take. That fired me up. And that's kind of what I think about angel investing, just in life in general, is that I think that, people get intimidated by maybe the language or someone's maybe profile. I don't have enough money. I don't have the ideas. And what I'd say is, like, take all that mindset and just throw it out the window. Stop letting people like dictate your life and lead it for you, or let these societal pressures tell you, oh, I can't do it, I don't know enough. This stuff, it's not as complicated as people like to make it out to be. And I think people like to make it out to be complicated because it makes them either feel good about it, or that gives them a little bit more of a chest puff, and I'm here and you can't be. But I would say break those walls down completely. So Republic is the perfect opportunity to do that. Like you said, Lolita, for $10, you can start there. So what I would say is, like, just from the get-go is break, the blueprint, what people are telling you to do, and just give it a shot, because there's going to be so many reasons. 99% of people are going to tell you every reason why it's a bad investment, why you shouldn't get involved. But you know what? Are you going to be the person at the end of the day that's going to regret everything they didn't do? Or are you going to be the person that's going to have great stories and life lessons from what you did do? And I know that's more of a high level, life path type conversation, but I think it does correlate to angel investing and really anything you do. The other thing that I think you alluded to in this question was, maybe a story that things went awry. Again, trust your intuition and your gut. You're investing in businesses, but I personally think you're investing in people here. So, make sure your people's, their personality, what they're doing, how they're doing it. The first investment I made, before I even considered writing that check, I went to go see what car he's driving, where he lives, what gym he goes to. I want to know his behaviors. And there was one deal real quickly that I didn't do, that one of my friends did. And the only reason I didn't do it is because we didn't get to the due diligence phase, but I didn't trust. My intuition was like, something is not right about this guy. It ended up being a scheme, and my buddy lost every dollar. So, trust your instincts.
I first of all, I just want to say, we're only 5 minutes into this, and it's just so amazing to see with 3 different angel investors with 3 different approaches, all of them just fascinating. Secondly, don't necessarily try what Jason suggested at home about following. That sounds like it was maybe a personal situation that you were able to do, maybe not recommended.
He's a very good friend of mine. So
okay,
he knows that I can. We have a different relationship.
Okay,
just so you know, if I'm looking at your company, I will not stalk you. Maybe online, but not in real life.
Appreciate the clarifications. Let's start getting into some brass tacks. Diversification is a word I think, Lita, you talked about, and some folks who are in our chat are chatting about. It can be used in a variety of different ways. We can talk about industry. We can talk about founders. How do you approach diversification in all sort of definitions of the word, Lolita, as you invest?
Well, I mean, there's so many ways, and in the presentation did a great job of listing so many ways you can dissect and segment how you look at the market. And ultimately, I think it's very subjective. And what I think is really nice about being an angel is that you get to choose whatever you want. It's your money, so you do whatever you want with it. Right. So for me, primarily, I have focused on a few different layers, if you will. One is B2B enterprise, because as I mentioned, that's my background. And I like to invest in companies that I can actually help from an operational perspective. So if I understand the business, I can help them from operational perspective, but also then maybe get them clients. And whether it's clients, so money, right? Capital from customers is the #1 best way to fundraise, guys, FYI, for any founders out there. Whether it's getting them customers, getting them partners, or helping them with the building of the business, it feels good to be able to understand, to be able to help. But then also, as I'm looking at companies, I can really better assess the business because I have a background in it. The second actually segment that I look at with my husband is insurtech and property and casualty in particular. And now this one, he takes more of the lead, but I am also very interested in learning about the future of insurance because I think it's super interesting, super unsexy for most, so it's super sexy to me. And it's really about, like, do you have that differentiated way of looking at a business so that you have an edge as an investor, and then also an edge for the founder, so you're actually adding value. The last thing I'll mention is that, and I've already mentioned, right, underestimated founders. There's so many of us, and it's dumb that we get overlooked, and I'm here for you. I won't invest in every single business. I wish I could, but that's exactly why I try to aggregate and connect people whenever I can. But I think there's a huge missed opportunity in not funding founders of diverse backgrounds, because there are so many specific problems and solutions that need to exist in this minority majority world that we're walking into. And it could be from a B2B perspective, so business selling to consumer, or from a consumer to consumer, in all types of way, or B2B, business to business, because at the end of the day, it's all of us working in companies or being consumers. So those are some of the ways that I think about it.
Awesome. Jason, how do you diversify your portfolio?
Yeah, Lolita, I think you did such a good job summarizing that. And I think one thing that you said that really resonated with me for this question was that you go, it doesn't sound super sexy, but it was super sexy to me. And I think when you talk about diversification, right, that makes a lot of sense, because the first thing I remember when I didn't know anything as to what I was doing, I would think about diversifying, and I was being consulted and told by others that I should look at these areas that I had no idea. I didn't know any businesses in those segments. I didn't know how they operate, how they ran. In my opinion, that is not the way to diversify. Diversifying doesn't mean put something into another area because you know nothing of it and it's going to like spread your portfolio to reduce overall risk. I think what you need to do is also align like areas that you know, areas that you are somewhat familiar with, and find ways to diversify in that landscape. And just because it's not sexy to someone else doesn't mean it's not sexy to you. So I still think if while diversifying is massively important, you need to also make sure that you have some type of knowledge, information, you're partnering with someone that understands that before you get too involved. Because if you diversify and you spread yourself too thin for the purpose of diversifying and get yourself in a position where you really have no value add, you don't understand the industry, how it runs, you might find yourself in a worse situation than actually diversifying. So just a piece of information I think is worth noting.
No, I appreciate the perspective. Let's again talk about specifics. What are some tools you use? It could be for portfolio management, it could be for diligence. What are just some things you use to help you do what you do? Lolita, you want to go ahead?
Okay, I'll go first. Ladies first, I guess. So I try to keep it super scrappy and super simple. I use Google Sheets. I use HubSpot as a CRM. And those are really the two key ones that I use. I really like it when founders have Carta, because then I can see everything in one place. But what I eventually end up doing is I've actually created a process, and I think this is really interesting. And I don't think it's necessary when you first start. So maybe I shouldn't go in there because I don't want people to feel overwhelmed. But when you get started, you know, you just dip your toes in and see how it works for you. But as I have progressed, basically I've developed a process that's scalable and efficient for me. That includes a form so that I can assess companies that may be in my range, so that I can connect with folks and then decide whether to invest or not. And that stage, that process, I use HubSpot for. And it could be any other.
Sorry to interrupt, is that a form that you fill out yourself or that you send others to fill out?
Oh yeah, I have founders fill it out because they are the best ones to know about their companies. And I will just ask about specific criteria so that I can assess whether we're a good fit or not. Because I don't want to waste anybody's time. And I know it takes a lot of time to fundraise. So I want to make sure, like, if I'm a good match, I'll come back at you. If I'm not, I don't want to waste anybody's time. So I go through my process and I documented it on a CRM. So HubSpot is what I use. But all of the data that I initially collect is based on a Google form. And then email. Calendly is also super important to me because it takes so long to schedule meetings otherwise. So those are my 3 picks.
Awesome. Jason.
Yeah, so I was actually just asking one of my partners, I forgot the name of the one we use, but we use Slack. And then we also use, which is a great one, we use Copper. And then another one he reminded me of that we use for when we hire is also an app called Crystal, which helps us really identify personality traits of the individuals that we're working with, founders, et cetera, to see just more about who they are behaviorally and what we can expect, things like that. So, you know, those are some of the tools that we use. And yeah, I think, like you said, like some of the simple things like Google Docs. We also have hired analysts and built our own models. So we have a lot of models that we use in-house that are all built with our team and things that we want to look at. So yeah.
And how do you use Slack? Just because as a tool to communicate with founders, as a tool internally, as you chat about diligence?
So we use it both. So some founders will subscribe to it. Some founders won't. A few of them will. And then we also use it internally too. So you can create different like folders that have access with different groups, different conversations. So for due diligence, for internal communication, and then also for founders, that's the beauty of it. You can use it for external and internal purposes.
Awesome. Again, kind of going back to just some brass tacks sort of lessons, like, you know, we talked about sort of lessons learned, what's one piece of advice you would give yourself when you were just getting started, given kind of what you know today? This time we'll start with Jason. Yeah.
So for me, honestly, I have done in the last like few years a really, really good job of networking, but not only networking, it's the management behind networking. So it's having your CRMs, it's active follow-up, it's continued relationship building. There were so many relationships that I could have done a better job of driving and staying in touch with at an early stage. And even if I go back to like university days, I just think about how many students I should have continued to keep in touch with, professors that I should have had relationships with that could have helped me throughout my journey. So there's just no substitute for experience. Unfortunately, I learned that a little later in life, and now I'm really honing in these relationships. The second thing I would tell anyone out there is like, it is amazing when you put something out. I've always been like afraid to say certain things or ask certain questions to feel stupid or things like that. But if you put things out, it's amazing what will come back to you. I'll tell a very quick story that really doesn't have much to do with angel investment, but I was speaking at a college, very small university, and I opened up any question, you know, that you would like to put anything out there. And we're just about to end the conversation. And one guy spoke up, and ironically enough, he's in physical therapy. They said, I wasn't going to ask this question, but I'm in physical therapy. I really want to go in sports. Everyone's told me my whole life that I can't get in with a major league team. How would you suggest I network in with a major league team? Because the conversation was a lot about networking. I'm like, I'm so glad this conversation didn't end. One of my best friends is a physical therapist for the New York Mets. We can connect you guys. Within 48 hours, those two are connected, and he's going to have a summer job with the Mets. So wow. I know it's a small story that doesn't really correlate necessarily to angel investing, but it does correlate to networking. And it's amazing when you put things out there and you have asks that are strategic, what will come back.
It's a very relevant story, actually. I think even Kevin was talking about kind of the value of networking and access. Mm-hmm. Let's go through some of the questions from the audience here. What's a misconception? And this will just kind of throw out, if you have a strong opinion on it, speak to it. If not, we can go to the next question. What do you think a misconception is that people have about angel investors?
That we know everything. Angels come in all sizes, shapes, and forms. Some of us are very, very sophisticated and know a lot about what we're talking about. And some of us know very little, almost nothing. And it's the job of a founder to really understand. I think it's also the investor. Investors, we need to have integrity and say where we can really add value and where we can't, where we start, where we stop. But that spectrum is incredible. And I don't think that everybody understands that. And sometimes it scares me because founders will take advice from different investors that are various degrees of sophistication, and it can be very dangerous to the business. So with that, I always advise founders to say, look, every person you ask is going to have a perspective on how you should do things, but ultimately this is your business, and you take the perspective people give you as reference point, put a lot of salt in it, and do the thing that makes the most sense to you, because it's your company. It's not theirs. It's not ours.
Yeah, fair. You got to reply. Yeah. If not, we can move on.
The only thing I would add to that is, I think a misconception, at least like for me at least, is that you had to come from family money, or it's a family office that gets involved in something that I want to put out there is that, when we started, it was just a very small group of us, and we didn't have much access to capital, and we thought it was almost impossible to get access to capital. And I think we learned very quickly through our network, hard work, and what we put together, that if you really have a good strategy and solid, credible people behind it, people are willing to believe in you, and they will invest in a fund that you are working to fundraise. So capital's out there. It's out there. You don't have to come from a very wealthy family or have generational wealth. Anyone can do it. And everyone is always looking for the next best deal. People will listen. So just, I want people to, always remember that you can make it happen, even if it, didn't come to you from the start.
Got it. Actually, I'd love both of you to chat on this one, which is right now our top voted question. Red flags. What are one or two red flags as you diligence opportunities? Jason, again, we'll start with you.
Yeah. So for me, it's like, I know I alluded to it earlier with my buddy who I went to college with, or friends with, and I was like, oh, we'll check this car out in the parking lot. I'm like, all right, I like that he's got the Subaru. For me, it's just like overextending, right? I mean, if we're putting capital in your pocket, like, I want to know that it's going to be spent the right way. I want to know that, I want to see what your salary is. What are your, the small, I think small behaviors are small examples for what like larger behaviors will look like. And so I want to know things like that, just, how much they're putting into the company. I want to know, what their plan is, and I want to know some of the smaller details. I think so that's, I look for those types of red flags. And then I also look for honesty. So everyone, I feel as though everyone tries to oversell a little bit. And so I want someone who's going to take full ownership. And so I will intentionally have questions through due diligence that I know the answer, that makes sense, that, why the growth didn't happen in this way, or where there was a miss on expenses and things like that. But I just want to hear ownership and honesty. So, those are some of my red flags I look for early.
Yeah. So I totally resonate, Jason, with you on the honesty part. Really red, super red flag is when you lie to me.
Mm-hmm.
I will find out. I will look at your deck and the logos, and I'll call my friends, because it turns out to be a pretty small world. And it actually happened not too long ago where a founder had a really great company, but lied in their deck. And there was another investor that tried to backpedal for them, but a lie is a lie is a lie. And I will not tolerate that. If we're going to have a relationship, it needs to be based on a foundation of honesty. And it may be, this is very subjective. There may be other investors who are okay with those things, but for me, that is like a flag that I cannot just close my eyes and pretend it's not there. The other thing would be about a red flag is when I also see some financial numbers and there's been no traction, but all of a sudden you're going to become a $100 million company. That's a red flag, not because of anything beyond, like, it makes me question the thought process of a founder, right? How, if they have a legitimate reason why they believe that this is realistic within whatever time horizon they give, okay. But if it's just for the sense of, showing that hockey stick, or it's the same with the competitive matrix, if you're just right at the top, corner, and there's nothing that's like substantive of why, that's also a red flag, because, and on the competitive one thing that I tend to see also is sometimes there's no competitive slide, like competitor matrix or list or chart. And I will ask why. And sometimes founders will say, I don't have any competition. And this is a red flag, guys. red flag, because there's all sorts of competition and they may not be direct, but there's always some sort of alternative or competitor. The third thing I would say is, I lost my third one. What is it going to be about? Jason, remind me. What is it going to be about?
Those were two really good ones.
All right, I'll stop at two. I'll stop at two. So please be honest and have some very good thought and thesis around why you're differentiated and why you're going to get to where you're going to go. Oh, okay. Third one. Now, I really don't like it when founders just say, I'm going to raise this much money. And then I ask, okay, what are you going to get with that and for how long? And the answer is sales. Person I'm going to hire. No, you need to, if people are going to put money into your company, it's really important for you to understand how $1 is going to convert in the spectrum of your next milestone, right? Is $1 going to become 2? Is $1 going to last you 12 months, 18 months? These kinds of details are really important because, again, it also helps me understand your thinking process and how thoughtful you are about how you're going to plan for things in the future and be successful.
All incredible points. I hope, audience, you're taking notes because this is just gold right here. When you look at early stage companies in your angel investing, how do you value prices? I know there's a range. Founders will sort of say, hey, here's the valuation cap. When you get that number, what do you do? Anyone
you want to take this one?
I'm happy to take it. So valuation is a really great question, or a great topic rather, and it's because it's an art and a science, and so no one's going to know exactly what it is. But what I tend to do when I do look at a priced round, right? It's not every company that's going to have a set valuation to begin with, but for those priced rounds, I take a look at what's happening in the market. What are other alternatives? And maybe a good analogy for those of you who are new to investing, it's like the real estate market, right? So when you're going and buying a house, or you're looking at property in Zillow because it's your dream house you want to buy, you notice what houses were sold around that area and for how much, and then you get a sense of how much that house that you want should cost. And that's essentially one way of looking at the valuation of a company. Is this company within this field of other companies that are similar? What's the valuation? And then it also is a question about if there is a margin of difference, a significant one, you want to know, like, what is the differentiation there? Are they like the best in the world and they're the only ones who have access to the ability to making it possible and they made a really great case? Maybe it's worth that extra valuation. But that's part of it. But it's also market driven, right? So if I'm really interested in a company and an investor says, hey, this company is valued, I want to value it at this, and everybody else is like, yeah, if you didn't accept these terms, you're not in, then I'm going to say, okay, all right, I'll take a higher valuation. And in fact, that's what happened in one of the investments that I did recently. And that's what happens when you're an angel too, because you're not leading an investment. Sometimes you have to follow and make a hard decision on, okay, am I going to go with this valuation or am I not? And ultimately you don't know what you don't know until, I think Cheryl or somebody else is saying, you don't really know how your investment's going to end up until years later, like 5, 7, 10 years later.
Yeah. Jason.
Yes. So what I'll add to that, again, valuation is a constant moving target. Lolita, as you're speaking about that, I'm just thinking about every deal I've looked at. I bring valuation back to the table. Who do I bring back to the table? With my partners and colleagues. What are my takeaways there when I'm thinking through this out loud is, one, I partner with people and hire people that are smarter than I am. And I'm not afraid to admit that. And I learn from them. They learn from me. We bring different things to the table. Also, when I think about valuation, I'm like looking at a potential investment. I will always, always, always try and use my network and team to help me out there. And something else in driving a team and partnerships is I look for no homogeneity. I don't want people with the same background, the same skill set. I want a diverse team with all different industry focuses, backgrounds, different corporations, et cetera. We will get on the phone with different M&A bankers and different industries. We want to know the trends that are going on because, as you said, I honestly think there obviously is a science with evaluating companies, but I think when you really see deals that become successful, it's really the art and valuation that really becomes the driver to success. And I think the art is derived, at least in every instance that I've been a part of, from multiple resources, multiple brains with all different perspectives.
We're actually, I mean, this went so fast. I'm having so much fun here. We're pretty much out of time. Would love just maybe some parting comments. Again, we still have almost 350 folks here. And this will be recorded and I believe, and shared later, I believe. Don't quote me on that. So many more will view this. What's some advice you have, parting advice for folks that are early in their journey? Lolita, you go first.
Sure. If you're waiting for someone to tell you, just try it out because it's been itching at you. Try it out. And you'll see if you like it or not, if it's for you or not. And always reach out to people for help. I love what Jason said. Find people that are smarter than you. I always do that because there are smarter people. And ask them questions. And surprisingly, people really like to talk about themselves and what they know. So you'll likely get yeses and you'll get nos too. It's part of the business. But, you know, I tease, but it is true. People do like to talk about the things that they know. So if you reach out to someone and you're like, wow, Jason, you're so smart on these things. Can you tell me about it? Jason might say, okay, sure. Yeah, I totally am super awesome at these things, which he is, right? But those are my parting comments. Just try it, give it a go. And if you have any questions, just reach out to those of us who are making ourselves available online and wherever.
Amazing. Thank you, Lolita. Jason.
Yeah, so I would say it's like, one thing I've learned in my life is there's constantly been detours and turns, and I think change has been one of the only constants. But I think change can just be a really good thing. And I think if you use change as a launch pad, it can drive so many opportunities. And I think the thing is just never, ever, ever say never, like never, right? And you just never know what life's going to bring you. And I think that you got to, like just in life in general, you got to put yourself in a position to get lucky. I see a lot of people in life, how'd that person do this? Oh, they got so lucky, they did this. Well, I think to get lucky, you have to put yourself in a position to be lucky. And I think the other thing, just like Lolita said, is just reach out, to be proactive, ask. You will be astonished at the amount of people that if you can bring just some sort of value to them and you take a professional, proactive approach to how you're trying to communicate with people and learn from them, you'll be absolutely blown away who will respond to you and the feedback they'll give you. A real quick story. Again, I have a buddy who has a 2-year-old daughter, and he was doing the simple high five with his daughter: up high, over side, down low, too slow. And so he knows that Tom Hanks loves when people reach out to him with a handwritten letter. So he wrote a handwritten letter to Tom Hanks and said, Tom Hanks, I'm teaching my daughter. I know you're a great father. What is the right time to go too slow? Do I wait till age 3? Am I building trust? And so, he did it just as a stretch. And Tom Hanks wrote back to him this 5-page piece, literally a week later. They now are in touch on email. They're like building a relationship. This is with Tom Hanks. Who can get a hold of Tom Hanks? No one. So my point is, I think, never say never. You can get a hold of so many people and just build momentum, because small wins just keep going, and you'll be able to take down a lot of things in your life if you take that approach.
You can also use Twitter, since I don't think a lot of us have access to Tom Hanks' mailing address. but I love the story. You can. I think, Jason, we need to contact you for like sleuthing. Like, I think you're the sleuthing pro.
So much information's out there.
Thank you both so much. This was a high energy, high information, short period of time. If you want to go and feel comfortable, toss your social media handles into the chat so folks can get in touch with you. That'd be appreciated. Cheryl, I don't know if you want to come on back as we kind of close this out, but thank you both again.
Thank you.
Yes, thank you.
Thank you, guys.